Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Election rally. Japanese stocks jump after a ruling party vote positioned pro-stimulus lawmaker Sanae Takaichi to become Japan's next leader. Slowing pace. Oil gains after OPEC Plus agrees to a modest production increase, staving off traders' fears of a supersized hike. And Israel and Hamas are set to begin negotiations in Egypt on a possible swap of Israeli hostages for Palestinian prisoners, with U.S. President Donald Trump warning he is losing patience with both. Well, it's just gone 8 a.m. across the Emirates. I'm Takaichi in Dubai. Very busy Monday morning in terms of news flow. I should mention the U.S. shutdown continues. Not that that has had a massive impact on global markets. We saw Wall Street end the week in the green last week, and this morning S&P futures leaning towards positive as well, up 0.3%. A lot of focus this morning on the political developments in Japan. We're going to get to that in just a moment. But bottom line is what you need to know is that the handover from the Nikkei today is extremely strong, up more than 4.5%. So boosting sentiment for global markets as well. 10-year yields we have trading about 3 basis points higher today, 4.15. And again, we're on the lookout in case the shutdown ends this week, in which case you get a backlog of all of the data that didn't come last week, including that jobs prints on Friday, non-farm payrolls. So we'll see if that's going to come out through the course of the week. And then gold. Gold has been the preferred expression into and around shutdown, and of course has had a massive run up this year. Yet another 1.1% firmer today, getting closer to $4,000 now. Unprecedented levels for the safe haven, but money keeps going in. So that is gold. And then Brent also in focus. Take a look at the energy complex today, up 1.5%. We traded down 8% throughout the course of the week last week. But this weekend, we did get the announcement from OPEC Plus. They decided to put back another 137,000 barrels per day to the market as of next month. This is a little less than what was being reported into the meeting. And perhaps that they do want to keep a close eye on fundamentals in this market, with loads of analysts out there predicting a supply glut, a pickup in inventories as we go into fourth quarter. And so OPEC perhaps being a little more cautious in terms of how much extra oil they want to bring back to this market. And switching over, because I mentioned shutdown, I thought this is interesting. Keep an eye out on the polls, and you can see that actually that white line is the Trump's approval rating, and you can see, according to Real Clear Politic, it actually dipped a little bit in the last week. And why this is relevant? Well, you would think that if the shutdown starts to significantly impact Trump's own popularity, then he may be incentivized to draw it to a close. So keep a close eye on what's been happening with U.S. favorability ratings for both Dems, Republicans, and President Trump himself. Okay, big day in Asia. Let's flip over and talk to Min Lo about everything that's been happening. And, of course, a lot of focus on these Japanese markets today, Min.
That's right, Jumana. Japanese markets really leading gains here and pushing the Asia-Pacific benchmark to a record earlier this morning. But the Nikkei, you can see here, is up by about 4%. And this is because of that LDP leadership rally that we're seeing, leadership change that we're seeing in Japan. The win by Sanae Takaichi, which was a bit of a surprise for investors. And she is seen as this pro-stimulus lawmaker. And with her win, there is growing expectations that it would lift growth, which is why we are seeing stocks gaining here, but also that perhaps we could see a reduced chance of a BOJ rate hike in October. And so we're seeing the steepening of the yield curve here. And that's why we're seeing the topics, one of the few, actually the only sector that is declining on the topics index today, the banks, which really hate steepening yield curve. But the Hang Seng is slightly down today, a bit of that tech rally from last week, taking a breather today. But we flip the board, take a look at the Japanese bond markets, because investors are really piling into the shorter end of the bond. You can see the 2-year yield down by about 3 basis points here, and the steepening of the yield curve is very clearly reflected here as well. And this is another factor that is, of course, putting pressure on dollar yen as well, which has broken out of its range. If you flip the board, you can see that dollar yen is now grinding above 150, and in fact moving way past the moving averages here. If you look over here, it's past the 50, 100, and 200-day moving averages. And again, stocks are loving this, and it shows that investors are really repricing that rate hike expectation. If you look at the implied rate hikes, we're looking at a collapse from about 70% to now just 20% chance of a rate hike in October.
Wow. Yeah, significant moves there in these Japanese assets. Min Min Lo in Hong Kong, thank you so much. Now, over to regional geopolitics. President Trump is pressing Israel and Hamas to seal a settlement to the two-year conflict that's devastated Gaza and destabilized much of the Middle East. The two sides are set for mediated talks in Egypt beginning later today. Hamas has agreed to release the last of the Israeli hostages, while signaling the rest of the U.S. peace plan is subject to negotiation. Trump has now made it clear he is losing patience with both Hamas and Israel.
We had some very good meetings. The countries of the world, a lot of the countries surrounding Israel, frankly, Muslim, Arab, and many others have had great meetings with Hamas, and it looks like it's working.
Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. It was quite an eventful weekend in this part of the world. We got the response from Hamas very late on Friday evening, and then also a televised speech from the Israeli Prime Minister Netanyahu over the course of the weekend as well. How has the Hamas response to the plan been received?
I think with the cautious optimism all around, there is a sense that today will either usher in the end of the war or the beginning of the end of the war. Just today, before the second anniversary of the war's eruption on October 7th, 2023, with that Hamas attack. Now, Hamas has caused a bit of confusion among Israelis, and I think the Trump administration as well, by coming in with this partial acceptance of the deal under deadline. The U.S. president said it would give the group until Sunday evening to respond, and Hamas did so right in the middle of that weekend. It was actually the middle of the night in Israel, so it took the Israelis a while to respond to that response. Why has this had a mixed reception? Because while Hamas obviously has misgivings about later clauses of the Trump deal, clauses that would require essentially its ouster from the Gaza Strip, stripping it of weaponry as well as political power, it is saying that it will go ahead with that hostage release up front, and that is something everyone wants for obvious humanitarian reasons. So no one wants to pass up the chance of getting that in hand, at least. So I think that's why we're going to see the delegations converge on Egypt today, in hope at the very least of getting this plan underway, with those hostages released, according to Netanyahu and Trump, potentially within days, and then see how the rest of the plan unfolds, or indeed if it unfolds. It's worth remembering that both Israel and the US have signaled that if Hamas doesn't continue going along with the plan, it would face military destruction by Israel in the Gaza Strip.
Bloomberg's Dan Williams in Jerusalem, where a cautious optimism seems to be prevailing. Let's continue the conversation now with William Roebuck, Executive Vice President at the Arab Gulf States Institute and former U.S. Ambassador to Bahrain. Good to have you with us. Do you see this as genuine engagement with Trump's 20-point peace plan, or just one way that both sides, and I'm talking about both Israel and Hamas here, are looking to pass time, to prolong discussions?
It's a good question. I think it's a bit of both. I think President Trump has maneuvered the two sides into a situation where they are required really to engage with the 20-point plan that he's put out there. And he's delivered some results so far that, as Stan said, your previous speaker, do, I think, offer some grounds for cautious, highly cautious optimism. Hamas has agreed to release the hostages. I think they have not said much about the rest of the terms of the plan, and they seem, in some media accounts I've seen, to try to be buying a little time, even with the release of the hostages and the remains of those who have died in captivity, by talking about the need for security arrangements and the need for locating the remains of some of the hostages buried under rubble or in areas occupied by the Israelis. So I think the two sides are engaging. But as negotiations go, they're looking for areas where they can get some leverage against the other side.
Yeah. Do you believe that Hamas full disarmament is on the table?
Well, it's definitely on the table but under the terms of the agreement or the plan that President Trump has put out there. It's going to depend initially on the release of the hostages, and then how Hamas is able to negotiate the rest of the agreement. But it's fairly clear they are not going to have a future role in the governance of Gaza. I think they've already conceded that in previous ceasefire negotiations. The disarmament, the actual physical disarmament of Hamas is likely to be a heavily negotiated issue on both sides. It's maybe the most difficult issue that they're going to have to wrestle with. It's fairly cut and dried in the agreement that President Trump has put out there for the two sides to agree on. But getting there is going to be difficult, I think.
Yeah. When you look at the text of that 20-point plan that was released last week, how much a footprint do you see from Arab Gulf states' involvement in getting that document together? There's been a lot of reporting about that meeting that President Trump had on the sidelines of the UN General Assembly with various GCC states and, of course, Qatar playing a key role there. How much influence do you think they had in actually finalizing that document that was released last week?
I think Gulf states and Egypt as well had a critical role in shaping the agreement. Those discussions at the UN General Assembly had a big impact. I think subsequent to the meeting that President Trump held there, he has held individual consultations with various Gulf state leaders and Arab state leaders like President Sisi in Egypt as well. So yes, they've been instrumental. I think President Trump sees these states as having significant influence. The Gulf states have significant resources that they can help bring to bear to pay for some of the costs that are going to be involved in rebuilding Gaza, paying for security forces that would need to be salaried there. Egypt, of course, has a lot of influence in the region. Non-Arab state, but regional power Turkey also apparently has been involved in these discussions and is a player who would bring to bear a lot of influence. So yeah, these states have had significant influence, and I think they've shaped the agreement. And of course, on the Israeli side, they've had significant influence in the text of the agreement as well, according to media accounts.
And just final thought, what do you make of the U.S., well, specifically President Trump's executive order that upgrades the state of U.S. security guarantees for Qatar? That was sort of something that went under the radar last week, but it is a concession that Qatar extracted from the United States.
It's an important agreement. It's the type of strong security agreements that a number of other Gulf states have sought with the United States and have not received. President Trump managed to get such a strong a set of security commitments by doing it as an executive order. Now, this is something that could theoretically be overturned by a future president. It's not as strong as a treaty, which would be ratified by the Senate, but it still is a very significant security document. It has boosted Qatar's confidence, I think, in relations with the United States, and it has allowed for Qatar to begin again to play a key role as a mediator in these negotiations with Hamas. So it's been very important in the short term, and I think also on the longer term security horizon in the Gulf.
Yeah. William Roebuck, so good to have you with us on the show today, Executive Vice President at the Arab Gulf States Institute and former U.S. Ambassador to Bahrain. Thank you so much. Well, a bit of breaking news coming through. This is our own reporting. Boeing is set to prepare for a 737 rate hike as soon as October. Rate hike here signaling that they could start increasing manufacturing output. The monthly rate last year was capped at 38 following that near catastrophic Alaska Airlines incident. And of course, on the back of that, there was a lot of tumult at the top of leadership, senior management changing. But this is the latest. Boeing seems to be guiding some of its suppliers that their output can now reach 42 jets a month, so an increase from 38 to 42, and that higher tempo could start as soon as October. So it really signals perhaps a little bit more optimism that the plane maker has vis-a-vis the construction capabilities, manufacturing capabilities, and actually readying those jets. And one of the big themes in the industry has been that of Boeing's delivery delays. One way that they could seek to rectify this and to bring forward the timing of deliveries is by increasing the rate output of manufacturing. So this is our own reporting coming through. Okay, still ahead, we'll talk investment strategy with ING Belgium as the prospects of Sanae Takaichi becoming the next prime minister upends Japan's financial markets. This is Bloomberg. Japan stocks have jumped with the 40-year yield surging as the surprise victory of Sanae Takaichi in the ruling party leadership race raises expectations of fiscal stimulus and curbs bets on an immediate Bank of Japan rate hike. Let's bring in Vincent Juvyns, Chief Investment Strategist at ING Belgium. Major moves today in Japanese assets. Nikkei very strong, massive backup in yields as well, 13 basis points higher in the long end, and the yen trading close to 150 again. As someone who looks at global markets, how influential do you think the price action today in these Japanese markets are going to have on broader investor sentiment?
Well, it will definitely lift the sentiment overall. This set, we're looking, in our opinion, at short-lived movement in Japan. We should not forget that the fiscal enthusiasm that we have today could be, let's say, overwhelmed by the fact that later this month you could have a rate hike and that the BOJ is also unwinding its QE and is actually selling Japanese equity. So these are definitely headwind for Japanese market, but for today, let's say the fiscal enthusiasm prevails.
Yeah. And speaking about the fiscal enthusiasm, another big story that's been on investors' radars is France. And it seems as though the new Prime Minister de Cornu is going to be running up yet again against the same issues as all of his predecessors. And the opposition groups are really not pleased at all that Macron appointed a cabinet very similar to the prior cabinet. How do you see France's political issues affecting the fiscal perception over there?
Yeah, there's definitely no fiscal enthusiasm in France at all. I'm not sure that this new government will change the equation at all. The issue is that France needs to shrink its deficit quite massively, not only by maybe hiking taxes, but mainly by cutting spending. And that's very controversial, as you can imagine, in France. So Macron is just kicking the can down the road with a new prime minister and new government, but it's very unlikely that he will manage to go through with the proposed budget cut. So that's still a situation which deserves our full attention, and which also that in Europe, obviously, not all countries have the means like Germany to support growth at the moment.
Yeah. Do you see scope for maybe global fiscal fragmentation, i.e. bond investors picking on certain countries, like what we're seeing in Japan today, massive repricing of long-term yields, similar thing in France, you're seeing a structural widening of OATs versus bonds. Can that paradigm continue, or are all yields going to have to move up higher, and we should be keeping a close eye on the impact that those markets could have on the U.S. Treasury curve as well?
Well, we've seen that 30-year yields have risen across the board, no matter the fiscal strength of the country in question. This said, we have seen this type of fragmentation in Europe, where we have seen some bizarre movement actually with Greece financing itself at a lower cost than France, for instance. So you start to see that this has an impact intra-Europe, and sometimes the periphery countries are doing much better than the soft core country to France. What to me has been particularly interesting over the last couple of weeks is to see that investors really differentiate maybe within sovereign bond market, but between sovereign bond and credit market. In all the upward move of the spread in France, we've seen that credit markets have remained pretty stable. So to some extent, investors look at IG corporate bonds as the new risk-free in some market.
Interesting. And let me just ask you about the U.S. The shutdown still continues, but if you look at the performance of U.S. equities last week, completely brushed off concerns about the economic impact or even the political impact of the shutdown, with the S&P ending the week actually 1% higher for the week. Can that paradigm continue, do you think, in the coming weeks, or is it a case of the longer the shutdown goes on for, the more investors are going to start to get worried?
Well, historically, these shutdowns have rarely have a big impact on market. The longest, which took place between 2018 and 19, lasted for 35 days. The impact on the economy was marginal, 0.02% on the GDP in 2019. Overall, we've seen that equity market fared quite well in this environment. The S&P 500 is plus 12% in the year following the shutdown. So for market, it's not a major issue. It's a bit more an issue for the dollar, which has historically traded lower in the aftermath of a shutdown. The good thing is that, speaking about fiscal policy, we know that the U.S. has to shrink its own deficit. Obviously, with the shutdown, as a matter of fact, it helps in that direction.
Vincent Juvyns, thank you so much for joining our show today. Chief Investment Strategist at ING Belgium, taking us on a worldwide tour from Japan to the U.S. in 5 minutes. Thank you so much. All right, coming up, OPEC Plus is cautiously increasing its oil supply, despite signs a surplus is beginning to emerge. We dig deeper into this later this hour. This is Bloomberg. California Governor Gavin Newsom says he'll sue the Trump administration over its order to send his state's National Guard troops to Portland. Newsom argues that the deployment defies a federal court ruling that found no legal basis for using state troops. It's the latest flashpoint in the president's push to federalize law enforcement in Democratic-led states. French President Emmanuel Macron's decision to bring back a largely unchanged cabinet is sparking an immediate backlash from opposition parties. The decision threatens Prime Minister Sébastien Lecornu's chances of surviving a crucial week in Parliament. Macron renamed most senior members of cabinet to their original posts, but named close ally Roland Lescure as finance minister. And coming up, the surprise victory of pro-stimulus Sanae Takaichi in Japan's ruling party's leadership election boosts Japanese stocks. We'll discuss all the details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Election rally. Japanese stocks jump after ruling party vote positioned pro-stimulus lawmaker Sanae Takaichi to become Japan's next leader. Slowing pace. Oil gains after OPEC Plus agrees to a modest production increase, staving off traders' fears of a supersized hike. And Israel and Hamas are set to begin negotiations in Egypt on a possible swap of Israeli hostages for Palestinian prisoners, with the U.S. President Donald Trump warning he is losing patience with both. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Bertecci in Dubai. Loads of news to contend with today. Regionally, geopolitics of major focus, with those talks taking place in Egypt, mediated talks between Hamas and Israel, with U.S. representatives there as well. So it could be quite a watershed week when it comes to regional politics. But of course, globally, paying close attention to Japan, the LDP leadership election there having a huge impact on Japanese assets this morning. The Nikkei soaring more more than 4.5%. So that's setting the tone for global equity markets. S&P futures up 0.3%. The U.S. shutdown continues this week with no signs of an agreement being reached between the two sides. So that's lingering in the background. 10-year yields moving about 3 basis points higher, perhaps in sympathy with the move that we've had out of JGB yields this morning. 10-year, 30-year JGB yields up anything from 10 to 13%. So quite significant. That is having an impact on global fixed income markets. Gold, another record high, getting close to $4,000 here, up 1.2%. It has been a favorite trade throughout all of this year. I mean, it's up more than 40% year to date. But even in the last couple of weeks into and around the shutdown, we've seen inflows accelerating. And then oil as well. Take a look at Brent. We are above $65 again. Throughout the course of last week, we traded 8% lower, but today up 1.5%. This after OPEC Plus announced that they're putting back less than perhaps what analysts had anticipated for them to announce, 137,000 barrels per day as of next month. So being a bit cautious with the amount of extra production that they're bringing back to the market there. That's given a slight boost to oil this morning. And switching over, just as we speak about shutdown, I will just say keep a close eye on favorability ratings. And you'll see that just in the last week, President Trump himself has seen a dip in approval into and around the shutdown. While what you are seeing is actually a pickup in support for the Republican Party as a whole and a dip for Democrats. So keep an eye on that because the polling and favorability ratings are probably going to influence how long this shutdown goes on for. Okay, let's go back and talk about the main story of the day from Asia. Pro-stimulus lawmaker Sanae Takaichi is poised to become Japan's first female prime minister. The Asia Trade co-anchor Sherry-Ann joins us in Tokyo for more. Well, Sherry, I've been talking about the huge market reaction that we're getting today, but maybe let's just take a step back. Tell us more about Sanae Takaichi. What do we know about her? What does she stand for? What are her policies?
Yeah, Jumana, you mentioned how pro-stimulus she is. We are now seeing questions among investors whether we'll see a return to Abenomics. She is a mentor of former Prime Minister Shinzo Abe, so we have seen her commentary really against the BOJ rate hikes, although she has toned down her rhetoric for this election campaign. Also, she's, of course, a hawkish conservative when it comes to diplomacy, a nationalist. She's had grassroots support in this election, which might have convinced LDP lawmakers that she will be able to pull the party together. But when it comes to her economic policies, she's promised cash handouts, tax rebates, hinted at raising the tax-free income allowance before the end of the year. So she has talked about her idol being Margaret Thatcher, but our Bloomberg opinion columnist Garode Reedy mentioning that perhaps she could be at least Truss if she's not careful. Of course, she caused panic with her fiscal expansionary plans. Takaichi has also talked about potentially needing extra bond issuance and that being unavoidable if they want to support Japanese households.
Yeah, and still keeping a close eye on how these yields are doing. We've got 30-year yields up 12 basis points today. But at the same time, you've got equities performing quite well. The yen is weakening, all-time low, I believe, versus the euro. Is there a belief that this market rally is going to be sustainable on back of the developments there?
In some sectors of the markets, especially when it comes to defense stocks, also some tech stocks as well, given Takaichi's commentary before on really those investments into strategic sectors. That's really leading to that upside in certain sectors. Nuclear power, for example, utilities, we're watching very closely. We know that she's pro-nuclear. When it comes to the banking sector, though, we see the downside pressure because of those expectations of the BOJ rate hike being delayed. So we're seeing that narrative shifting towards potentially lower rates, despite the fact that the yield curve is steepening, which could help these financials. You mentioned the 20-year yield spike. We have the 40-year yield spiking, the 2-year yield falling, so that steepening curve here in Japan continues. Although Goldman Sachs now saying that the long-term yields, that continued upside could really be seen for some time to come. The 10-year yield already at around levels that we haven't seen since 2008. When it comes to the Japanese yen, yes, a downside against the U.S. dollar past that 150 level and a record low against the euro as well on concerns about fiscal expansion, on concerns about the BOJ delaying its rate hikes, which now, before the election, there was a 60% priced in the markets that we would see a move this month. That has actually gone down to around 20% now.
Yeah. Well, things can change very quickly depending on the political landscape. Bloomberg, the Asia Trade co-anchor Sherry Ann in Tokyo, thank you so much for joining our show. Now, OPEC Plus is cautiously increasing its oil supply despite signs that a surplus is beginning to emerge. For the second straight month, the group agreed on Sunday to revive just 137,000 barrels a day of halted supply. The decision comes despite earlier differences between Saudi Arabia and Russia. For more, we're joined by our Asia Energy team leader, Stephen Sachinsky. Stephen, give us the nuggets of this meeting. We know that it was 9 minutes long in total, but talk to us about how they came to that 137,000 barrels per day number. There were some reports last week that it could be as much as 2 or 3 times that amount.
Yeah, I mean, the reports last week, we were hearing that it could be 500,000 barrels. And so I think that's why you're seeing such a reaction in crude prices today. They went with the lower number, the same number that they went with for October. They're going to continue that for November, which is relatively modest. Now, within the meeting, it seems to be that there was some sort of disagreements between how to move forward with November increases between Russia, which is a member of OPEC Plus, and Saudi Arabia, which is a de facto leader of OPEC and the world's biggest crude producer. Now, when you look at the differences, it seems that Saudi Arabia wanted to take a more aggressive approach. They wanted to increase output more than this 137,000 barrels a day, whereas Russia wanted to be more modest. Now, there could be a number of reasons between that. Russia, it seems like, wants to defend the oil price. If you add more barrels into the market, you could continue reducing the price, and that's not great for Moscow, which is also in the midst of fighting a war in Ukraine. Saudi Arabia, meanwhile, is more focused, it seems, on capturing market share, which they've lost to shale drillers and others over the last few years as they've reduced supply across OPEC Plus across the board. So Saudi Arabia has the most spare capacity to add of all the OPEC Plus members. So it does make sense that they want to be more aggressive in adding their output. Meanwhile, Russia is a little bit more constrained. They've had to deal with drone attacks on refineries and other oil assets from Ukraine, and that's kind of restricted the amount that they can really add back into the market. So that was the disagreement that came between those two major members over the weekend and how we came to the 137,000 barrels a day.
So interesting. I knew we'd get the nuggets out of you, Stephen. Looking ahead, did OPEC give any commentary about how they see the supply-demand picture evolving in the next coming months? You know, in the run-up to this, again, many analysts, especially the IEA, have been calling for a supply glut that could get bigger and bigger as soon as Q1 next year. What have we gleaned from how OPEC are thinking about things?
No, I think OPEC Plus takes a very pragmatic approach, and they've been very clear across the board. They don't necessarily share the same view that the IEA, for example, or the banks put out about this, about where we are with the market. They think that the market is able to absorb this 137,000 barrels a day. That's what whenever they make an increase, they always say the market is able to absorb it. And quite frankly, the market had been absorbing a lot of that supply over the last year, thanks in part to stockpiling by China. China had been buying more to put into stockpiles, not necessarily because they had more demand. Maybe it was opportunistic, maybe because more storage came online. You can ask a lot of questions as to why China did that, but the supply was absorbed. So OPEC Plus still views that the 137,000 barrels a day can be absorbed into the market. Now, I think you can also glean from this that they didn't go with the bigger value because they do recognize that we are getting to a frothier market. You know, I won't necessarily say it's a glut right now, but there is a lot of supply that is entering over the end of the year, and 2026 could be quite oversupplied.
Stephen, thank you so much for the overview there, Stephen Sachinsky. Now, Syria has held its first parliamentary elections nearly a year after the fall of former President Bashar al-Assad. There was no direct popular vote in this election, but 2/3 of the 210 member assembly seats will be elected through province-based electoral colleges, with seats distributed by population. The remaining 1/3, however, are set to be directly appointed by the interim president, Ahmed al-Shari'a. The new parliament will serve a 30-month term while preparing for future elections. And coming up, Saudi Arabia expects to run a deeper budget deficit this year than previously expected, and that gap isn't stopping the kingdom from spending. We'll discuss Saudi's fiscal strategy with Edward Bell from Emirates NBD next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Saudi Arabia isn't letting a $65 billion hole in its budget stop it from playing a leading role in the largest ever leveraged buyout. Just a day after the kingdom's public investment fund announced plans to partner on a $55 billion deal to take electronic arts private, Saudi Arabia projected an even deeper deficit. The shortfall is now estimated at 5.3% of GDP. That is more than double the previous forecast. To discuss what this means for Saudi's investment strategy and fiscal outlook, we're joined by Edward Bell, Acting Group Head of Research and Chief Economist at Emirates NBD. Last week, I would say there were two major developments that came through from Saudi Arabia. The EA Sports, largest leverage buyout in history, with the biggest chunk of funding, equity financing, coming from PIF. The same week that Saudi Arabia are also revising upwards their budget deficit for the year. So how do you square the two up together? How is it that the PIF are still committing this amount of financing to external investments in a year where clearly there's a lot of pressure on the domestic budgets?
Well, I think if we take the budget to start off with, I mean, when we looked at what was being planned for 2025 when it got announced around this time last year, we thought that the projections were a little bit too shallow, a little bit too conservative in terms of the fiscal deficit that was being planned. So our forecast originally was around a 5% of GDP deficit. So the government now coming in and saying that's more or less where they're seeing the numbers this year, I think is a reflection that the revenue situation has not been as strong related to the oil story. But on the other side, this commitment to expenditure, this commitment to GRE spending from an investment like the one from PIF into EA is just more of a commitment to the diversification strategy. So these are investments that are going to be generating returns for Saudi government, whether that's directly through PIF or directly to the government balance sheet itself. And I think they fit into a longer strategy of the transformation and diversification of the Saudi economy.
How do you see the evolution of the Saudi budget deficits in coming years? And what are the options the authorities have? Do you see them massively tightening in and reining in spending, or are they going to have to somehow raise revenues?
So we think it's going to be in deficit for a couple of years, but probably on a declining path from what we expect for 25 and 26, where it'll be probably around about 5% this year, maybe closer to 4% for 2026. And I think we're probably using a lower oil price assumption in our forecast than maybe the Saudi government is doing going forward. In terms of how they're going to be financing, look, Saudi Arabia has been very transparent about saying, hey, we're going to have a borrowing plan. We're going to issue that at the end of this year, and we're going to tell investors what kind of capital that we're going to be needing. And they've been very transparent about we're going to go out to markets usually pretty early. They're usually when the first come out at sort of January times with big issuances, and they remain to have very strong access to capital markets as well. Yeah. So we don't see a lot of pressure on that side for them to be able to raise money through borrowing. Also, the debt position of Saudi Arabia to start with is very low for a $1 trillion plus economy. You're talking low 30% of GDP in terms of total public debt. So there is ample room for them to continue to be able to borrow.
Yeah. At what point do you think these wider budget deficits are going to have a knock-on effect on investors' willingness and appetite to fund Saudi Arabia at these levels? I.e., is there going to have to be a risk repricing to account for the wider deficits?
Well, I think already you're seeing that in terms of the kind of spreads that Saudi gets relative to some of the peers across the region. So they're a little bit wider. They're not particularly extravagantly wide, but compared with some of the other markets in the GCC, they're a little bit wider, as you'd expect. Still, the ratings for Saudi Arabia are very strong. Good investment grade credit that's available, a regular borrower, a diversification and transformation story that is pretty strong, and I think investors continue to buy into it. Yeah. We're not really worried about the deficit really widening substantially from what we expect around this sort of 5% for 2025. But if you saw that really materially deviate, if there was sort of a runaway spending, which very evidently there is not. If you look at the pre-budget plan, yes, there's an increase in spending next year, but thereafter they're relatively moderate increases and a budget shortfall that in the government's projections comes closer to about 2% of GDP. So not really worrisome numbers, I think, as far as the investor base is concerned.
So let me ask you a growth question. The IMF are expecting the PIF to spend about $40 billion a year at home. Is that growth stimulative?
Well, look, I think the strategies from the PIF are multiple. One of them is certainly to invest in assets that are going to help the growth story for Saudi Arabia. And we have seen really robust activity in the non-oil economy. The PMIs that we have for September, for instance, were really strong. I think the other angle for PIF is to invest into a transformed Saudi socio-cultural experience. So it's not just about generating economic returns. It's about what is Saudi Arabia going to look like in 2030 and beyond in terms of opportunity, in terms of living quality.
And finally, let me just ask you, OPEC Plus, that is, we had the decision this weekend, but steadily it's been Saudi Arabia that have been bearing the brunt or taking upon themselves to bring those extra barrels back to the market. Is that a boon for the Saudi Arabian economy because they're finally able to produce more in terms of revenues?
Yeah, well, I think it's a definite shift in the strategy to say, well, we're not going to go down a price targeting route anymore. We are going to go for a volume versus value kind of approach. So they'll be able to capture more and more of a oil market share in the balance when there's some restraints on other producers who maybe would want to get access to it. So we do think it is positive in terms of the revenue that's going to be generated, even if it's at lower prices, but also contributing to growth in a serious way.
Yeah. Edward, so good to have you on. Thank you so much. Edward Bell, Acting Group Head of Research and Chief Economist at Emirates NBD. Well, for more of these stories, looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, the IMF says talks on a new program with Senegal will begin mid-October after an audit uncovered billions of dollars in undisclosed debt. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Talks between Senegal and the IMF are set to begin in mid-October as the West African nation seeks a new program following revelations of debt misreporting. Well, for more, we're now joined here in the studio by our Chief Africa correspondent, Jennifer Zabazaja. That's a nice treat for a Monday morning. Good to have you with us.
Thanks.
Let's talk about this Senegal story. What specific steps, corrective measures have Senegal taken in anticipation of these upcoming talks with the IMF?
I mean, the reforms that we've seen from Senegal have been the focus for the Faye administration because, as you know, there was misreported debt that was unveiled in an audit that we saw from President Faye, and actually it was from the previous administration. So they really focused in on some of these reforms. So they include increased taxes on things like alcohol, tobacco, also digital transfers. They're also trying to at least renegotiate some of the energy contracts that they have, so oil and gas. And really the focus for this administration has been ensuring that there is transparency communicated to the markets because the misreported debt was quite a concern for them and resulted in their IMF program being paused. Yeah. And so many people were waiting to see what it is that they are able to do. And what we heard from Kristalina Georgieva, was saying that they've made important progress. And a lot of these steps that the Faye administration has announced are not easy, right? We've seen some protests in other countries where the governments have actually announced some of these similar reforms. And, you know, they know that this is what they need to do to ensure they move forward with an IMF program.
But how critical is it for the future of the economy that they do get another package passed and another agreement with the IMF in October?
They need this. They need this not only to stabilize the economy, but also, again, to ensure confidence for investors. We did see this IMF program that was paused. We also have seen high unemployment for a number of young people and debt that's increased in the country. And so investors over the past few years have really sort of taken a turn in terms of how they're viewing the economy. And so the Faye administration has prioritized this. They made a number of promises when they were running for the election. And so investors are waiting to see some of these reforms come to light. So if they do, in fact, get this new IMF program, we could see the economy start to turn around. And I should just note, just a few months ago, we saw the economy, the S&P actually downgraded the country to junk status. So a number of investors, even anecdotally that I've spoken to, have said there was so much promise in a country like Senegal. And so when this happened, it really
What is the mix between the structural reforms that they need to do versus some of the fiscal consolidation? Some of them are cyclical and some of them are structural.
Well, I think if you take a look at what they're trying to do, they want to focus in on as much as they can control, right? Because some of it is, in fact, due to, the situation that we've seen the country in over the past few years. And, they need to turn their economy around in some way. And so we have seen the Faye administration at least try to put out their own pronouncements for what they can do, but they know it's going to take quite a bit of time. They've had inflation that's been quite sticky in the economy for a number of years. And so if they are able to at least communicate some of the reforms that they can make on their own, perhaps we then start to see a turn in the economy. And then, once some of the other macroeconomic issues that the country is faced with start to stabilize a bit, maybe things help them and get back on a path to stability.
Well, IMF meeting is going to be key, as they always are, for many of these nations seeking programs or further bailout packages. Jennifer Zabazaja, our chief Africa correspondent. Well, let's just take a look at how equity markets are faring today. We walked in, big news out of Japan with the appointment of a new LDP leader. Could be soon Japan's first female prime minister ever. A strong reaction to the Nikkei this morning. That index is up more than 4.5%. But it is having a knock-on effect for global equities. You can see all of these U.S. indices pointing to the green. European markets also pointing to the green, despite the fact that France, once again, coming under scrutiny with the appointment of a French cabinet very similar to the prior cabinet. Opposition lawmakers not happy there. And then in fixed income, also keeping a close eye on the repricing of yields coming through from JGB, with the yield curve there dramatically steepening. That is having an impact on the U.S. yield curve. Take a look today. The 10-year yield's up 3 basis points, 30-year up 4 basis points in sympathy as the U.S. shutdown continues. But that is it for our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.